Hello traders, my name is Ranga and I am the blogger and creator at renkotraders.com. This is the first of the many videos that I will be producing on a weekly basis to update you guys on the markets and also point you to some potential trading opportunities. This will also give you some insights into how I trade using the Renko charts. So in today's video, I will be focusing on the Aussie Kiwi currency pair. The reason why I chose this currency pair is I've been watching it for quite a while, and I've managed to make a couple of trades on this in the past couple of weeks, and I actually believe that there are two good trading opportunities that will come our way. One, the first trading opportunity is that I expect the Aussie Kiwi to correct itself from the current levels, and eventually I expect that the Aussie is going to rally against the Kiwi. So that said, let's take a look at the charts, and I've tried to make this analysis as easy as possible. Please pardon me for the audio. My computer has been giving problems, and I hope to have this fixed by the time I release the next video. So let's move on into the AUDNZD Aussie Kiwi Renko technical analysis. First, we take a look at the 50 pip chart. Where basically I've already marked out the points and the various technical levels as well. So let's spend some time on the charts, and I've pretty much jotted down the notes on the next slide. So just to give you an idea of what's happening, we have the resistance here that has been identified by the three peaks and then a reversal. Right here, and then we've got another attempt to break this resistance, which resulted in a double top pattern right here. We've got the base of the double top pattern at 1.1048. Price briefly broke through and managed to find the support, and then we saw a rally again back to the resistance level. Now, as of Friday's trading session, which is the 7th of August, price attempted to break this resistance level, but we noticed that we could expect to see some kind of a reversal candle, which could result in a breakout from the rising price channel. Also to note that prior to all of this, the upside move began with the bullish divergence that we notice to the RSI, where price makes a higher high. Price makes a lower low, and the RSI makes a higher low. So on break of the price channel, we expect that the correction to end between 1.079 and 1.0748. The reason why I've chosen this particular level as a resistance zone is again based on divergence. Here you can see that price has made a high and a lower high, whereas here price has made a higher high. And notice that the divergence is formed right near the double top, which gives me some added conviction that this double top could actually be valid, and we could see a decline. Now incidentally, if the double top does indeed work out, this is the target that we're looking at, 1.0748, which again sits in perfectly with the bearish divergence to the RSI. And finally, we notice this short-term trend line, which is marked by the dashed trend line. It was broken here, and you see the retest right at this level again. So everything put together, I'm convinced that the Aussie will not be able to break the current level of resistance, and that a correction is due, which will see a drop to 1.0748 on the 50 pip chart. So to basically summarize what I've just pointed out, price is currently trading near the identified resistance zone. It sits between 1.1248 and 1.11980. There were two attempts to break this resistance zone, and which failed, and it resulted in a double top pattern. We then noticed that the minor trend line was broken, the rising trend line, and if we view this alongside the resistance zone, it does point to the fact that the levels of 1.1248 and 1.1198 is actually a strong level of resistance. And as I also pointed out in the previous slide, we do have the bearish divergence to the RSI, which points to a potential downside correction. Now this is besides the double top pattern that is formed. So the most likely support level where prices could fall to is between 1.0798 and 1.0748, which marks the measured move of the double top pattern, as well as the most likely level of resistance where the bearish divergence is going to end. Now, in terms of risk, if we do see that price falls below 1.0748, then the next level of minor resistance is at 1.0398. However, this is a level that we need to consider, which I will cover in the later parts of this analysis. Now let's take a look at the 100 pip chart for the Aussie Kiwi. And here, as you can see, we have a nice inverted head and shoulders pattern being formed currently. Now, first things first, we have the the bullish divergence here, as price makes a lower low and the RSI makes a higher low, which resulted in a rally to the level of resistance, which sits near 1.1298 and 1.1198. Now we have the left shoulder here, we've got the head, and this is where I expect the right shoulder to be formed. Now, how did I get these levels? Well, I've just simply taken them off the 50 pip analysis, and I've put in there, and I've given a scope for a 100 pip block. So expect the right shoulder to form between 1.0698 and 1.0598. Another point to consider is that this level would also mark a retest to the trend line. Of course, we've got the breakout here, but I expect that this breakout might not hold that well, because as you can see, this whole level of support and resistance is seemingly much more stronger, and we also see a strong breakout from this level. So definitely price could do a retest at this point. Now, if the right shoulder is formed, then we could expect to see quite a strong rally that could take us to at least 1.22, 1.23 region. As you can see here, this is a level of support and resistance that is most likely to be tested. So we can expect a test to 1.23, 1.24 on break of the neckline, and assuming that there is a perfect right shoulder being formed. So summarizing this, We have the current resistance levels of 1.1298 and 1.1198 even on the 100 pip chart. There is the possibility that an inverted head and shoulders pattern is being formed. So far we have the left shoulder and the head, and we're waiting for the right shoulder to be formed. We anticipate, note that I stress on the word anticipate, because for all we know, price could simply ignore our analysis and just do what it wants. So we anticipate that based on the correction that we've identified from the 50 pip chart, the right shoulder could be completed. So we could expect a potential rally from the support of 1.0698 to 1.0598 to test the resistance, the current neckline at 1.1298 through 1198. The right shoulder will also mark as a retest of the breakout of the trend line, as I've mentioned, and a successful head and shoulders, which means a break above the current resistance of 1.1298 and 1.1198. We'll see a rally to 1.2498 to 2398, which marks the measured move of the inverted head and shoulders pattern. So to conclude the analysis, we expect a correction based on the analysis of the 50 pip Renko chart from the current levels to 1.0698 to 1.0598. This correction, if the support holds at the above levels, we'll see it retest to the previous resistance or the neckline as well. The neckline of the inverted head and shoulders pattern, and this particular level of support will mark the completion of the right shoulder. So the correction, and along with the formation of the inverted shoulder from the 100 pip chart, will be at risk if price drops to 1.0398. Now, if you remember, I had previously mentioned on the 50 pip chart analysis that we do have a minor support at this level. So in the event price intends to fall much below than the major support noted at 1.0698 to 0598, then we could see a quick drop to 1.0398, which could kind of give you an early warning that things are not going to plan, and it should help provide you in offering some kind of an exit strategy. So the way I see it is, in the event of a test down to 1.0398, there will definitely be a bounce back to the major support in order to test it for the resistance. And because we would be having our long positions lined up here, the bounce from the support should be able to help us liquidate the position with little to not much of trading losses. Now, assuming that things go as planned and the inverted head and shoulders pattern is formed, we could see the neckline being broken, which will then result in a straight up rally to 1.2498 to 2398. Excuse me. So that's it, folks. This marks the my first video, and I hope you liked it. Once again, I apologize for the audio. I hope to have this fixed by the next week's video. And if you have any comments or questions, please feel free to use the comment box and let me know. Thank you once again for watching this video. Have a good week ahead.